All right, guys. So we got Microsoft earnings today. Hopefully, I hope the market goes up. I'd like to see the market go up today, but we'll see. All right, so let's put Microsoft up. We could also watch. There's a few other ones coming out with some stuff. Here's Microsoft right here. It's down at 241s. Market's been kind of choppy. Bed Bath & Beyond popped up to 370s this morning, but didn't really do anything. Here's the SPY on the left. Slight green day all day today. Are you bullish? I don't know, to be honest. I hope it's good, But if it drops, if Microsoft tanks the market or something like that, then I'll just start buying some dips and stuff. I might buy the Microsoft dip. The actual earnings calls for 5:30. This is Q2 earnings, by the way. It's Q2. So yeah. All right, guys. So yeah. We're going to do the earnings report. We're going to stream the full report as well. All right, there we go. Yeah, what's up, DS? What's up, Pawn? I don't know. Benzinga has it listed as Q2. Maybe y'all are right. Let me see. Calendar. Let's see what they're showing. Let's see what Microsoft says. Yeah, it's fiscal year 23 second quarter earnings. Is what they have it listed as. So no, it's according to Microsoft, it is fiscal year 23 second quarter earnings call. So let me look at Earnings Whisper and see what it is. Today we got Microsoft. Let's see if it says. Yeah, it's second quarter. Companies have different fiscal calendars, is really what it is. But yeah, today they dropped their second quarter. So the actual earnings report should be out at 4:05 p.m. Eastern Standard Time. And I've never done a Microsoft earnings stream, so I'm hoping we get some good views. And if we do, then great. We'll keep doing it. We're also going to do a poll on Twitter as well as YouTube, as we always do. We're also going to do a poll. Yeah, I hope the market pumps up too. Bullish or bearish on today's Microsoft Q2 earnings report and call. Vote on this poll. Let us know. Oh, it's going to do a Twitter poll like we always do here. We're going to get. All right, so we're also going to do a Twitter poll here on calls or puts. Let us know what you guys like here. Again, so the actual earnings should be out within the next 25 minutes, give or take. So, yeah, over the next 25 minutes, give or take, we should have these numbers out. It's storming over here, man, on my end. Yeah, big drop heading into the close here. Interesting. Also, do me a favor, hit the like button on the stream if you can. We're posting our Twitter link right now, too. Hey, browse, it's been a minute. What's up, Stretch? Hey, thanks, man. I hope the market pumps. Yeah, I mean, we're falling down a little bit ahead of the open. We've been mostly consolidating over 400 all day. We're starting to drop down pretty dramatically. Microsoft's been mostly choppy. Not really any big movement or Microsoft or anything like that. All right, so we just pulled under 400, rejected at 400. We're down at 399.80s right now. And again, we got about 25 minutes. Do y'all want a timer? I can put a timer up here as well. Might as well. Got a timer. We got about 23 minutes. 22 minutes. We'll just call it 22:30. There's the timer. Expectations. We will put these numbers up on screen. But Microsoft expectations that I'm showing here are for $227 per share. Okay. Yeah, so $227 per share is what I am showing here. I will write this. You guys can see it. All right, so we're going to put this up on screen. All right, so this is, we've got the data up on screen. You can see that. Yeah. So 4 p.m. is Eastern Standard Time is when the earnings come out, 4 p.m. Eastern Standard Time. We got about 30 votes on our Twitter poll here as well. About 63% are saying put options, 37% are saying call options. So we will see. Let's see what the poll stated here. We asked people here as well, bullish or bearish on today's earnings report. On YouTube, we got 57% saying bearish, 43% saying bullish. So, yeah, that's basically what we're looking at right now. I'll get my blue blocking glasses on here, help my eyes a little bit. Give me a follow on Twitter as well. I'm also going to do also going to send out a newsletter here as well. If you want to join our newsletter, you can join our newsletter here. I'll post this link, completely free to join. And we'll try to send out the newsletters on all the big reports we got going on. All right, so look at the SPY just break down under the volume weighted price. What a weird day, man. It has really been a strange day, in all honesty. It's been a strange day for stock market activity. Not for me. My day's been pretty normal. It's flooding around my part of, it's kind of flooding around my parts here. But it's still not that bad, So hope you guys are having a good day. We got 19 likes. We could pump those numbers up. Those are rookie numbers. If you could, we'd love for you to hit that subscribe button, guys. We appreciate it. Or hit the like button, I mean. Or no. Yeah, hit the like button. Might feel good. Try real quick. See it. Might feel good. Sorry, I'm doing something over on my other computer here. Getting ready to send out our newsletter here, guys. So again, join our newsletter. It's free. It doesn't cost anything. Let's see if the market can hold, man. I mean, look at the breakdown here that we're getting. So 399.30s on this breakdown here, man. Look at this break dump under here. Microsoft down to 240.60s as well. So. Getting sending our newsletter out. SPY is just steady breaking down, man. Look at this breakdown here. Microsoft testing lows as well. I might buy the dip in Microsoft. I'm certainly not recommending you all buy the dip. Like we might buy it. We still got about 15-20 minutes before these numbers are actually out. Got to show up and get the latest and greatest from top 3. Hey, thank you, Bob. My short is looking okay. What are you shorting right now, Ali B? What are you shorting right now, man? All right, we got 50 votes on Twitter, 60% saying put options, 40% saying call options. So getting some breakdowns there. All right, so we are bouncing up a little bit. All right, so you're shorting Microsoft. Yeah, I mean, I don't think I'm going to short it. I think it's cheap enough for me to consider dip buying it too if it drops enough. So I might buy some more XBI breakout. All right, so yeah, we're bouncing back up a little bit on Microsoft. We're under 241s now. We're also looking at the SPY here. SPY started to break down, really what sparked this movement, specifically in Microsoft. Maybe some big money starting to follow Microsoft. I'm not sure, to be honest here. Looking at some other stuff here. We got the Q breaking down with us of tech. Tesla is not doing as bad as some other stuff. Amazon is starting to test lows at 96. We got oil and Exxon and stuff like that who had some of the crazy action, man. It's been a weird day. But Exxon and oil are doing okay ahead of all of this stuff. Apple specifically is leading the market a little bit. So it does look like Microsoft is dragging the market down. Maybe Amazon a little bit as well. Google's pretty down too today. So, I mean, we got some large caps dipping down for sure. We'll see what the rest of the day looks like. Remember, the market does close at 4 o'clock, and that is when we will get Microsoft earnings out. So 4 p.m. Earnings will be released right around then. We still got 20 minutes or so until the actual earnings are actually out, so we got some time ahead of it. Just doesn't seem like the type of day for continuation. Yeah, it's definitely choppy. I think the craziness this morning, just to put this into perspective, there was some weirdness that happened this morning, man. Again, the stock market ended up blaming it on the stock market ended up blaming it. We also have Capital One earnings today too, by the way. Texas Instruments, not really anything big. Tomorrow's Tesla, AT&T in the morning. Intel on Thursday, Chevron and some other oil stuff on Friday. Yeah, the other thing that's kind of crazy. The other thing that's kind of crazy about Microsoft or about Elon is that Elon invested $10 billion into OpenAI, which is Chat GPT, which is something that is incredibly useful and interesting. 4 p.m. for Belgium is, I have no idea, Rodolph. Sorry, brother. Google's your friend. I'll tell you that. I'll put 4 p.m. Eastern Standard Time, EST, is when the earnings come out. So just Google that. Hey, look, I'll do it for you. But just this one time, Google's your friend, guys. 4 p.m. EST to Belgium. Belgium time. It is going to be 10 p.m. for you. 10 p.m. At specifically 10:05 p.m. Belgium time. That's when the Microsoft earnings are going to drop. But listen, you don't have to go anywhere because that's in about 20 minutes from now. And we're going to live stream the whole thing. We're going to cover, people tune in for these streams because we cover the data quickly. And yeah, we're going to cover the whole thing. So we'll cover the earnings when they're up, when they're out. We're also cover Cap One and the other earnings that dropped today. We're also going to be streaming the full earnings call at 5:30. So, yeah, ask Chat GPT too. Yeah, all good. Yeah, no worries. Elon or Bill Gates? I don't know, man. Yeah, Chat GPT is surprisingly crazy, man. Like, it really is. I've been on that thing every day. Oh, dude, Chat GPT just it booted me out. It said, "Oh, you've been logged in too long. We're gonna have to make you re-sign in." And then I tried to re-sign in and said, "Oh, Chat GPT's at capacity." So they basically kicked me off. I've been on it too much over the last few days, but I've been on Chat GPT just too much. That says we're at capacity right now. Oh, come on, bro. You're just not even gonna let me log in. I mean, I know how to do it. Like, I know how to get around it. You just gotta try it on different browsers and stuff like that. Like, that's how you get around it. You can open it up. All right. Elon invested in ChatGPT and OpenAI. Bill Gates and Microsoft are considering acquiring them, I believe, or they already acquired them. But Elon invested money a long time ago, and not a long time ago, but a while back. Elon had invested 10 billion in it ahead of it. He ended up getting out before they got really big. After ChatGPT was already big, now Microsoft wants to buy them or acquire them or whatever it is. So that's kind of what went down. ChatGPT wrote a poem about the status currently of ChatGPT. So this is a robot writing poems about itself. Okay. ChatGPT, oh ChatGPT, with AI so smart, but alas, it's at capacity, leaving us to wait for a chance to chat with its wisdom and wit. We long to be part of its conversation, but for now we sit on the sidelines patiently waiting for the day when ChatGPT is ready to play again. The end. ChatGPT wrote that. So AI poems here, guys. That's where we're currently at in society. The SPY just broke over $400. Microsoft is rebounding really nicely right now. We are getting some volume pumping into the markets right now. That's good. I hope we continue. We'll see if we can. But yeah. Spotify joined Google, Intel, Microsoft, Amazon, and Salesforce by laying off companies. Microsoft, SharePoint, and Lucid Software announced new integrations as well. I'm going to put these up in chat. Yes, sir, Joey. Listen, that's society now. Hey. I wanted to let me log back in, but it won't. That sucks, dude. I had it. Once you get it in, you can sit on it for days and days, though, is the thing. So, like, you can sit on it, but it takes a little bit to get in there. Like, you can get it up. It's just so useful. Listen, and again, you might not understand what the hype is about, but I'm telling you, as a software developer, okay, like I program React mobile applications. This thing saves me a lifetime of work. It genuinely does. Imagine you know how to code, right? But one of the most tedious tasks of coding is thinking of the algorithms and writing out this long script of stuff that you have to write. You know how to do it, but it takes time to write it out, to organize it, all that stuff. I can literally say, hey, ChatGPT, write me an algorithm that automatically documents the high and low of the day on ThinkScript, which is Thinkorswim's trading program language. I can say, hey, write me a script that documents the highs and lows, including the previous closing price, where the highs are labeled as a green bar and the lows are labeled as a red bar. And it will understand exactly what I asked of it and give me that code within 30 seconds. You know, that's crazy, like, time saving. That saves programmers so much time, it's ridiculous. And that's why you got people like Bill Gates and Microsoft, or not Bill Gates, but you got people like Microsoft, companies like Microsoft wanting to buy it because they understand that the ceiling is raised in terms of production output for something like that. You know, just to put it in perspective, they understand that ceiling is higher now because instead of them having to pay somebody to do that, you know, instead of having to pay somebody 50 grand a year to write those scripts for you, you got a robot that can do it. You know, that is the significance of it. That's an important thing to understand about it. Is that's why it's so useful. That's why Microsoft wants to buy it. Yeah, that makes sense. Now, the only question mark I have for ChatGPT is what about What about front end language development? Like, can I ask ChatGPT to program me code on the front end, like design? Can I say, hey, give me a column here with, you know, a gray background that gives me XYZ? All right, can I do that? If I can, then I haven't even tried that on it yet, to be honest. But that's super interesting. All right, guys, we got 5 minutes before the market closes. 5 minutes. Yeah, that long is probably struggling right now, Ali B. Right, exactly, Joel. That's the crazy useful part. It's genuinely like crazy useful. It's gotten me excited to code again because it's going to save me so much time. Like, again, coding's tedious, man. It takes time. Like, especially something like React, where you got to import React DOM, state your function, like build all these connectivity pieces and applications in your project. That would just save me so much time, man. All right, market is basically completely U-turned from starting to look weak about 20 minutes ago, and it's all the way up to 40.5s. Microsoft is all the way up to the volume-weighted average price at 242 currently, 242. So it's moving. It looks good. It's trying to move, and we'll see if it continues. It's a trap. All right, so SPY just got up to the previous closing price. You can see this light blue line here is the previous closing price. It's a level at which the market goes red to green, green to red. So SPY gets over this 400.63 level. SPY will technically be green on the day. As long as we maintain under this, the market will technically be red on the day here. So we're going to give this time to move. Whew. Dude, I got it. Okay, I got ChatGPT to work. Now watch. Here, y'all want to see what I'm talking about? For all those at home that don't understand what I'm saying. Again, we got about 8 minutes before the numbers actually come out. All right, so look at this. Like, watch this. All right, let me show you this. Hold on. All right, like, watch this. Write me a think script code that gives me the previous closing price in an orange line on the chart. All right, that's bad English, but it'll still understand exactly what I'm saying. Here's the script, plotting the previous closing price in an orange line on a chart using a Python library matplot. I'll have to go back and tell it, but look at this thing. It'll literally tell me the language. All right, guys, we got about a minute left. About 1 minute left. And look at it write the code. It writes the variables that it needs, gets the closing price using these different functions. These must be built in Python, plots them out using objects. Look at these objects, man. It writes them up quick. That's crazy. Market's still pumping up. Okay, SPY just broke the previous closing price at 400.6. All right, guys. You can see the SPY just tapped the previous closing price. It just tapped it. All right, we're also going to put it in subscribe only mode. So listen, if you're tuning in, hit that subscribe button. Help us grow. We are so close to hitting 100K. We're at right around 98K now. SPY just rejected that previous closing price level. Microsoft's still pumping up here. So Microsoft's still moving up. We are waiting for the actual earnings report to drop. And so bear with me. We're just sitting back waiting. I will dismiss the timer. All right, SPY just rejected here. Microsoft still up there. So we do have some earnings that just came out. Let's take a look at the ones that just dropped. So Waiting for the earnings to come out. Microsoft hasn't released theirs yet, so you can see here. We still got 5 minutes. But there's 242s. SPY moving up here. Look, 400.3. So tapped 400. So we're now over 400. All right, guys, we still got 4 or 5 minutes left before the actual earnings. And then we're actually going to do the earnings call as well. All right, Microsoft looks like they just dropped. So Microsoft earnings just dropped. Look at this big drop at 241s here, 241s. Texas Instruments dropped EPS of 213 on revenue. Microsoft flying up at 245s right now. SPY up to 401s. Following it up here, guys. Following it up. Let's see what the earnings actually showed up as. Flying up at 250s. Guys, at 250s. All right, waiting for Microsoft numbers to come out, guys. Bear with me. All right, Microsoft is out. They dropped second quarter EPS of 220. 220 EPS, revenue of 52.7 billion. So 220 EPS on revenue of 57.2 billion. They expected 227, so they didn't quite beat EPS, but their revenue was higher, so 52.7 billion. So they came in a slightly under expectations here. I don't know why they're up. They came in slightly under expectations from what I'm showing here. I'm showing 232. I'm sorry, 232 on. So they slightly beat on EPS. 232 EPS, adjusted EPS was 232. They expected 230. And now you can see big rips right now. Here's the numbers right here. We will also stream them on the bottom of the screen so people can see them. So pulling back a little bit. SPY up to 401.50s here. 401.50s. We can see all the rest of their numbers. So basically, I'm going to start listing all of the price points for Microsoft in the chat. Yeah, they were about a minute late in reporting, but that's okay. Listen to their price points in chat. Second quarter services revenue, 36.23 billion. Productivity and business operating income came in at 8.18. Microsoft at 253s right now after pulling back some. Xbox content revenues down 12%. We did have Intuitive Surgical Inc. quarter 4 earnings drop. Yeah, their earnings are going to impact the S&P 500 because they're to put this into perspective. If you look at Microsoft, S&P 500. Let me see what their earnings percentage is. I know it's not small. But yeah, Microsoft weighs on the S&P 500 as number 2. They weigh 6% of the entire S&P 500, and so Microsoft's number 2. Apple is number 1. So yeah, Microsoft's a big percentage. It's 6% of the overall S&P 500. So Microsoft does well. S&P 500 does well, is what it is. Guidance. I'm looking for guidance now. Yeah, I didn't see any guidance here. Sales miss estimates. I'm going to put that data up on the screen. But the SPY is actually starting to dip down here. So the SPY is actually starting to dip. I'm not sure why, but look at the SPY fall. Microsoft hasn't really dropped much. All right, we're at 252.60. SPY at 401s. All right, Microsoft holding at 252, starting to move up. 254 is the new high of the day level. All right, my bad. Let me get that out the way. Microsoft now at 253.50s here, starting to move. SPY at 401.40s. If y'all can do me a favor, hit that subscribe button. We certainly appreciate it. We are in sub-only mode. We do have some big stuff coming this week. We got jobless claims. Markets testing highs. Look at Microsoft test the highs. It's at 254. It's dragging the S&P 500 up some. I'm looking for dip buys to get involved with here. Snapchat, no. Apple, no. Markets testing the high of the day. Look at Microsoft. It's up there at 254s. They didn't miss on everything. Their adjusted EPS came in higher than expected. They posted 232 on 230 expectations. Revenue of slightly lower than expected by, slightly lower than expected revenue at 52.7 versus 52.99 expected. I need help. It says my positions are closed. By account is still going down. Are you holding options, Hayden? Are you holding futures contracts? Because if you're holding a futures contract, if you look at your monitor section on Thinkorswim, it's not going to show you. It's not going to show you the actual futures contract. Your price or profit should fluctuate on the actual symbol the contract is on. Hey, what's up, Andrew? All right, Microsoft just broke the high of the day. It's at 255, 254s. Hey, what's up, John? Yeah, thanks, man. Hey, shout out to the 500 plus people here for Microsoft earnings. Tomorrow is going to be the crazy one. Tesla earnings are going to be it. Microsoft pop it up a little bit. All right, 254.20s. SPY at 401.40s. $254 is a big level here, so we're watching that spot. If you haven't already, guys, check out Top Step. You can see like the S&P 500 moves a lot like Microsoft here, right? So one of the ways you can get exposure to stocks, there's no PDT rule in futures. If you look at the E-mini here on the right, you can see it's the same price action. This is the same as this. And you can trade this right side here without restriction in futures. There's no day trading. There's no PDT rule in futures. You can day trade short without restriction. And one of the ways to test yourself as a trader, and this is something I really wish I had in the beginning of my trading because I would have lost less money, to be honest, are these funded account programs in futures, right? Top Step is the most legit futures funded program in the world. They are a sponsor of mine. I'm definitely biased in their favor, but again, they genuinely help traders get better. They help traders learn. They save traders money because a lot of people are going to try these out and lose, and instead of risking thousands of dollars themselves, they're going to have an accurate judge of their skill by doing something like this. What they do is they give you a demo, and if you can hit the target on their demo while following their rules and pass their testing, basically, if you prove profitability, then they fund you between $50,000 to $150,000 with a 90% split. Once you're funded, you make $20K. You keep 18 of that. Since they're funding you that money. Regulated in the U.S. by the Chicago Mercantile Exchange, and all that good stuff once you're funded. And again, they pay out millions of dollars. They fund thousands of traders. If you want to check them out, great way to help support your boy in this channel. Again, I'm definitely biased in their favor. They are a sponsor of mine and pay me money. And so I'm definitely biased in their favor. But again, I genuinely think it's good for traders. I think it helps traders test their skill without risking a lot. You know, traders having to put up the same amount of money in futures would need 5 to 10K, and then you're risking a lot. And I just think it's a good, accurate test of skill, gives you some pressure. Microsoft pulling back a little bit. We're going to put that link up in the description if you're interested, as well as in the chat. Check it out. Yeah, today was absolutely crazy, bro. People lost millions of dollars this morning, 100%. All right, you can see the E-mini right here at 4,000 plus. All right, so Microsoft pulling back down to 252. Yes, hey, that'd be correct. I mean, you withdraw the money like I think if you're on those funded account programs, once you get over, you withdraw the money every once a week or twice a week or however you want to do it. Expecting a big bull rally. Yeah, I mean, you can see the Microsoft stock just broke down under the volume weighted average price. I'll put it on the right side so you can see it. And then here's the futures contract. Just to kind of show you how similar they are. Like, look, futures drops, E-mini drops. And so you can day trade this left side here in futures on Top Step and try it out. Like, it makes sense. Yeah, hit the like button. Great. Yeah, I hope the market goes up. I really do. I really hope the market pumps up here. Yeah, earnings were not super impressive here. We're going to make a big list of everything that you'll be able to read at the bottom scroller. So we'll give you a big list. All right, so again, we're going to give you a big scroller with everything at the bottom just in 1 second. Bear with me. All right, you'll be able to see everything here. All right, so here is a full list of basically their intelligent cloud revenue, all that stuff. All right, so scrolling at the bottom of the screen is a full list of everything that dropped. Bull market coming back. Hey, thank you, Rob. Earnings don't warrant 4% up. Yeah, maybe it's a little bit extended here. You can see the S&P 500 starting to pull back some now. Yeah, the call's in a couple minutes. All right, guys. So market's bouncing a little bit. You can see Microsoft popped right back over 252s. So we'll see. Why is Amazon up? Well, I mean, to put this into perspective, okay, Microsoft is a tech company. Generally, when we got a big company, again, this is number 2 on the S&P 500. So generally, we got a big company. Microsoft is number 2 on the S&P 500. It's in the tech sector. All right. So when they have favorable price action, you're going to get sympathy moves in other tech stocks, right? So basically, other tech stocks are going to kind of copy off of it. You know, think about it like this, right? Microsoft drops good earnings, or at least reacts well to the earnings that came out. A lot of other traders are saying, hey, Microsoft had good earnings. Let me buy another tech stock like Amazon or Apple or Google, right? So you're likely to see sympathy moves in those stocks. So Apple, Google might be up a little bit on this report. Maybe not, but you know, those are things that people look at. One of the ways to catch moves before they happen, like one of the ways to write up sympathy, is you look at the same stocks, you look at the same sector stocks, and you know, you might have a little bit of lag in between the two. So you might have one stock in housing rip up big percentages, and then you know, a couple minutes later, other housing stocks kind of trickle up in sympathy, is what it's called. It's called sympathy movement in markets. So that's kind of what we're getting now in a lot of tech stocks, but not really. I mean, Google's down, Apple is sideways. But it would have been better if Microsoft held. Crypto sometimes. Well, Tesla actually has very similar sympathy for whatever reason. Tesla's actually a tech stock. Y'all to remember that, like Tesla is a tech stock. Just to put this in perspective, look at Tesla right now and look how similar these charts are. Here's Tesla on the left. Here's Microsoft on the right. Yeah, so they're very similar. I mean, again, and this is the nature of pairs trades. Like one of my favorite trades are pair trades. One of my favorite types of trading is pairs trading. So I'll look for a big move to happen on Apple or Microsoft or Disney or whatever, and then I'll ride the accompanying sympathy move in the Q or the S&P 500 or the E-mini and futures. You know, I do it all the time. It works really well if you can do it right. And again, if you like day trading this stuff, you can trade futures. And just like stocks have a reaction, futures have a sympathy reaction as well. Again, if you look at Microsoft on the right, you look at Tesla, you look at the E-mini here, which is a futures contract that you can day trade as much as you want without restriction. No PDT rule. You can short, go long with the margin account, no restriction. It looks exactly the same. This is when pre-market started. So again, just to put this into perspective, here's the futures contract on the left. If you want to day trade that, you know, you can test it out in futures. Here's the link. I'm going to try out Top Steps funded account program and challenge. It builds you into a better trader. I wish I had it at the beginning. All right, so Microsoft's starting to creep up a little bit. It's at 252.60s. Yeah, what's up, Todd? Still live, John? Hey, what's up, Kareem? IMP? Is that a stock? No, it doesn't look like it. But so many abbreviations, brother. You know. AMC fell back to 550 today. TXN. Texas Instruments down. Yeah, so Texas Instruments. Now we had Cap 1. Whatever Capital 1. Cap 1, which is COF, dropped their earnings too. If you look at COF on the left side here, COF dropped earnings as well. Puts and calls are important and all, but stocks move options, and options may move stocks, but you know. Burrow is a beast. Oh, Joe B is the GOAT, man. I mean, I don't know. He's not the GOAT, but he's certainly my favorite football player lately. Honestly, bro, Joe is good, man. He's better than people expected him to be. I know he got drafted number 1 in the draft in the 2020 draft. I know he got drafted number 1, but a lot of people thought Tua should have been number 1 at the time. And Tua's done all right. Tua, the Dolphins, he did great until he started getting hurt. I don't think anybody questions Tua's skill as a quarterback. What people question is his durability. That dude is. I'm worried about Tua. I hope he can make it. He's a good dude. He seems like a really good guy. Microsoft at 252s. There's Cap 1 on the left. Isn't Snow a software company? I didn't think they dropped earnings today, did they? Yeah, they must have. Snowflake. All right. All right, guys. Snow. Yeah, Snow's a software company. I'm just not super familiar with Snow. I'm a software developer, but I don't really like software stocks, to be completely honest. I like AI stocks. I don't like software stocks. So while Snowflake is cool and all, it's just not a stock I know of it. I've covered their earnings before. It's just not my favorite stock to buy because, again, they're software companies. And I know software companies can have a high ceiling, but in terms of what I specifically am interested in investing in, where I want to buy safe, not vulnerable stocks that are not super vulnerable to fluctuations. And I think software companies, unfortunately, and let's see, what has Snow done over the last year? And yeah, Snow's had a pretty tough year. Pretty tough few years, really. So that's the only thing. Again, for stocks, I just don't like softwares. I'll be real with you guys. Like I said, I don't have to lie about it. I like the stocks I like, and again, everybody could be that way. I mean, y'all don't have to like the same stocks as me, and I don't have to like the same stocks as y'all. I just don't like snow. I don't like software companies. There's too much vulnerability there. But yeah, thank you, Derek. I appreciate it, man. All right, guys, we got about an hour before the actual earnings call, so stick around. We got about an hour. Snow pulling back. Speaking of snow, let me see what happened. It had to drop earnings, right? No. So Snowflake is going to buy Snow Convert from Mobilize.net for an undisclosed sum. So they are acquiring another company, and Deutsche adjusted their price target to 170 from 185. So they actually had a lower price target, but maintained a buy rating for Deutsche for Snow. But they also acquired Snow Convert for an undisclosed sum. And that is why Snow is up. We will put that in the comment section. And yeah, hey, y'all hit that subscribe button, guys. We appreciate you. We appreciate you all. Let's keep the growth up. Mara is a crypto miner, Rob. So you got to understand the nature of obsession when it comes to stocks, right? You really got to understand that. I'm not hating on any companies or anything like that. That's not what I'm doing. But I understand what forms these big supportive communities of stocks. I genuinely do. I'm not trying to act like a know-it-all. But what happens here is that you have people who buy specific stocks or crypto, right? So they buy stocks or crypto, right? Maybe they buy a mining company, maybe they buy actual cryptocurrency. And then that cryptocurrency falls down and they're heavily invested into it. And so at that point in time, just like the AMC community or something like that, they turn into these big fanboys of specific communities and stocks, right? And Mara and Riot are definitely one of them. Again, the problem with Mara and Riot is easy. If you want exposure to crypto, just buy crypto. Like, why buy a mining company that basically moves exactly like Bitcoin and other crypto? I mean, I guess it's cheap as $4. It's on the stock market, so there's more regulation. But what's the purpose of that? You know, like, why don't you just buy Bitcoin or somebody sell me on it? Again, I'm not hating on it. I like Bitcoin. I like crypto. I hope ETH goes up, you know. But why buy Mara? Why buy Riot? It just seems like added risk without the benefit. You know, if Bitcoin rises, Bitcoin rises, you know. I guess you might get a little bit bigger percentage moves with a company like this. It has the potential to go up 100% or more if it gets up to $16 and so forth and so on. But it also has added risk in that regard too. So I don't know. Again, I'm trying to be objective. Maybe I'm wrong. Maybe there's some value in holding Mara and Riot. Let me know. But oh wait, Derek, are you quad P? Are you quadruple P? What's up, Kyle? Just joined in, but have you heard any update on what happened this morning? Yeah, man, it was some weirdness this morning, brother. It was some weirdness, man. Basically what they blamed it on was some type of technical error. So Dennis Dick from Benzinga said the opening trades originally posted to New York Stock Exchange were incorrect. He had OPGs on some of these stocks and they did not execute. End quote. Basically some type of error or glitch. Not really. We didn't really get much more information on all that stuff. Okay, no, you're not quad P. Then you would know. You said you changed your name. There was another guy, I call him QP, who I kept telling him to change his names, but it's all good, man. Okay, got you. I guess you could do some covered calls if you're on the stock. Yeah, maybe. Microsoft pulling back. Yeah, Microsoft's not really moving much. I mean, you know, we've been consolidating back and forth at this support level for a minute. You know, we'll see if it does anything. But yeah, Microsoft has basically just been kind of. That's the price action of Microsoft right now. Not saying it's not good. I'm not saying it's not going to do stuff, but you know. Yeah, what's up? All good. Derek, no worries, man. I lost 415. Yeah, people lost millions on that drop. It was weird. I've never seen that in the history of my trading. And I've traded I've traded for years and years and years now. Never ever seen that. Never once have I ever seen that, man. It's just odd. Yeah, y'all join our Discord. Again, we got about an hour before the Microsoft earnings call starts. All right, so bouncing at 251. So Microsoft is bouncing up a little bit here. Starting to push up to 252s here. We got Mirror here. We got Riot. AMC, we got Apple here. We got the futures contract of the E-mini. And we are at 4,000 plus right now. The reason they took off is Chat GPT. I prefer HUD 8. HUD 8 is interesting. Which way will Microsoft go in an hour? Not sure. The reason they took off is because of the Chat GPT. Yeah, Chat GPT is nice, man. It really is really, really cool. Starting to bounce up a little bit at 251s now. We'll see if we hold or what happens in this. It's probably some kind of cyber war. Yeah, that's what I originally thought. MicroStrategy owns some Bitcoin too. Yeah, because of that, I don't like MicroStrategy either. I mean, I'm not against MicroStrategy, MSTR. I'm not against it. I know Michael Saylor and all that stuff, but again, I don't trust it. I simply don't trust it. MicroStrategy on the left. We also had Capital One here, which I guess COF is Capital One. And again, Capital One didn't really do that hot. Capital One had a negative reaction to markets here. Microsoft starting to push towards 252. Wait, somebody said they don't trust me? Why don't I trust it's not that I don't trust MicroStrategy. My main problem with it is that the exposure is a little bit too high for my taste. You know, again, in stocks, you guys got to understand my logic here. If I'm going to trade risky, I'll invest in crypto. You know, but if I'm gonna swing trade and buy up companies, you know, which is mostly I almost never short outside of day trading, right? So if I'm gonna buy companies to hold, they need to be surefire things, as close as I can get to that as possible, you know. And I just don't think anything that's super heavily involved with Bitcoin right now is that. I like Bitcoin. I hope Bitcoin goes up, and I think if Bitcoin breaks over 25K, then we're going to be looking a lot better. The problem is, what if we don't? You know, I think there's risks involved with all that. You know, that time will tell. I just don't like buying it enough. We're just under 252s. Google at 100. Microsoft just broke over 252s here, guys. Over 252s. Uh, 251.90s here. We'll see if we can break over. We'll see if we can break over 253s right now. We're right around that spot. Yeah, hit that subscribe button if you haven't already, guys. Hit the notification bell. We got over 100 likes. Let's keep the growth up, team, if we can. All right, we're at the 252s. Yeah, I'm just glad it stopped raining, man. It was storming at my house earlier. Bitcoin is the cow and altcoins is the milk. Without the cow, there's no milk. That's why I don't touch alts. Yeah. Amazon is popping with Microsoft. Yeah, Amazon's up there, man. Amazon's testing 100. And I remember telling people at $90 that I liked Amazon. I told a bunch of people, if you guys have been watching the stream, long enough, when Amazon started to hit 80s and 90s, I was like, man, this is objectively cheap. And it was, man. Amazon has pushed all the way up. 25% is what Amazon is up over the last 3 weeks since I made that call. And I don't really want people to copy me. I know I say that all the time. I don't really want that type of pressure. But I think people can learn by the idea of that and how I trade. And I talk about this a lot because I think it genuinely works. And I think that's rare, in market is strategies that genuinely work. And I think waiting for low PE, healthy blue chip companies to drop dramatically with low PE ratios and pull back to objectively cheap levels and then buying those and sitting on those as long as you need to, I think just powerful strategy that could really grow your account. Again, it could really genuinely grow your account. All right, testing 252s right now, guys. Testing 252s. I mean, not forever. You need to have risk levels in place. Like, you can't just hold them forever, but within reason. Like, you need to hold that as long as you're willing to. I think, in my opinion, like the way I do it is I hold it as long as I need to. Of course, if it breaks down under like historically low levels and starts to really break down well under where I entered it, like down 20-30%, sure, cut that thing, man, get out of there. And that's going to happen. It happened with me with Intel, or it just didn't move enough for my taste for Intel and locked up too much money. And all that's fine. So I'm not just saying blindly hold things. What I'm saying is that when you research something that you think can go up long term, you let it go up long term, and you hold it long enough to capitalize on that. And if you diversify well enough and you have enough money to throw around, that could be easy money in markets. Which blue chips are you looking at? I'm not looking at any right now. 88 is a low PE. No, Amazon doesn't have a low PE ratio. And so that's the one aspect of that trade that doesn't ring true at all, is the PE ratio. The PE ratio of Amazon is very high. I was talking about this morning. But Amazon, I think, regardless of PE, which, can be useful, but in other times it's just not relevant. I think the strategy works regardless of that one part being correct or not. Like, it doesn't have to be super, good PE ratio in everything. Like, it's not super rigid. You can do that on whatever you want, but I personally like to find a good mix of objectively cheap levels, major support levels, low PE ratios. But it's all based off of each individual stock. Like, Amazon's the one exception to that rule, because I think Amazon is large enough and is innovative enough in terms of changes our culture and has changed our culture enough to make that still justifiable, even with the high PE ratio, just based off of how much everybody uses that service every day. People use Amazon every day. And so when you can find, I think there's certain stocks that just don't follow PE ratios super closely. Yeah, I'm not in any swings right now. I'm flat. Again, I just don't like anything enough. Nothing's objectively cheap enough for me to really want to get involved with it, to be honest. So I'm flat in everything right now. But if we get some big drops, during this earnings season, sure, I'll consider it for sure. But we need some large enough drops to make it worthwhile. All right, good. Yeah, Microsoft over 252s at 252.14s now. We'll see if that continues. What's up? Thanks for being live for earnings. I'm going to call end of day. Microsoft, we'll see. Hey, good luck, bro. Jay Powell, drop it. Don't worry, baby, man. Yeah, looking like Powell. Yeah, so remember, February 1st, we got the rate hike decision from JP, and that's what everybody's referencing. And we'll see. Hopefully, again, it depends on what it is. That's why I need objectively cheap levels that even if Jay Powell says some bad stuff, it's not going to really hurt me too much. Microsoft at 252.30s. 252.30s. All right, Microsoft still pumping up almost to 253s now. Almost to 253s. Almost at 253s now. Let's see if we can break that level. It is a historical resistance level right there. You can see it, but we're right at that spot now. All right, pulling back a little bit right at the 253 spot. Now here, raise rates. What do you guys think we're going to do for the next rate hike decision? Netflix, Microsoft earnings are not great and they pump. Yeah, it's been an interesting earnings season, man. So far, we've had a lot of companies that have not dropped the best results. A lot of these companies are not super great results, but they're still moving up a lot. Just interesting. A lot of these results are not amazing, but they're still moving up some. Again, Microsoft had mixed results. So, part of them were positive. The other part were slightly worse than expected. None of them were super big, misses or beats, though. They weren't really one-sided. They were both pretty sideways and neutral in terms of their reports. Microsoft, as you can see here, did an EPS beat but a revenue miss. So they're mixed. All right, so Microsoft rejected there. It looks like a little bit of a double top. I don't know if we're gonna hold this, but we're pulling back to 252. Let's watch to see if that level holds as support or resistance or whatever we're looking for at 252 or 253. Nvidia for a breakout. Yeah, we can look at Nvidia on the left side here. Yeah, Nvidia looking good, man. It might be helping Microsoft to a certain extent too. All right, pull back all the way under 252s. So well under the previous level here, and then we completely pivoted back up. So we're at 251.75 for Microsoft here. We still got about 45 minutes before the actual earnings report. And again, we will stream that live here as we always do. Let's see if we bounce here. 251 is a pretty solid support level, so I'm curious to see if that level holds. Nvidia is stronger, in my honest opinion. Honestly, the market felt like it wanted to rip up another week before coming down, so I went long instead. I didn't have faith in Microsoft. Yeah, I mean, I'm not going to bet against Microsoft. The only thing to understand for me personally is, like, I just don't take any huge bets on anything ahead of earnings. I don't get in any big size ahead of earnings reports. It just doesn't make sense for me to. I'd rather just wait, let the earnings come out. Maybe we'll get a big emotional reaction to it and be able to play it like that is kind of what I look for. But everybody's different, and just because I don't have an edge trading one specific way doesn't mean that you won't. So make your money, guys. I'm not mad. What is that, Rob? No, Microsoft's not the second largest market cap, but it's the second largest percentage of the S&P 500. So the largest percentage of the S&P 500 is Apple. Microsoft's number 2 on the S&P with about 6%, I believe, is what they show up as. So about 6%. What do y'all think of those beats, man? I got these different beats playing. Right around 252, NVIDIA trying to pull back. We'll see if it bounces back up or what. First big day, yeah. So again, from what I can from what I can understand, I think we're gonna hit 100K right around February 1st, which is nice. I mean, listen, I'll take it anyway. It might be a week after, it might be a week before, for all I know, but we're gonna hit it somewhere around then. Music was good 20 minutes ago. Yeah, it's not really changed. It's basically the same kind of lo-fi, quiet, calming music. But if you want something different, bro, let me know. It's all good, man. All right, Microsoft stagnant. The earnings calls at 5:30. You can actually see their full list of earnings at the very bottom of the screen scrolling, as well as see their base earnings. They might be right underneath me right here. They could be. I'm not saying they are, but they might be like right here. Just a weatherman at, this area, Aki. What happened to Microsoft? Microsoft dropped their Q2 earnings report. Their earnings were mixed. Slight miss in terms of sales revenue. Slight beat in terms of actual EPS. So that's what we got right now. Microsoft kind of consolidating back and forth. How much of an increase will Microsoft go? I have no idea how much Microsoft's going to go up, down, or sideways. No idea. NVIDIA at 194.40s. All right, guys, we have about 40 minutes before the actual earnings come out. Again, what are y'all's predictions here? Let's look at our poll numbers here. So we got about 700 votes. 56% are bullish. 44% are bearish. We're at 252s on Microsoft, kind of sitting sideways. I like this beat. This beat's good. This beat's, I like it. So this morning, several big and liquid, huge securities were locked because of high volatility. Yeah, so this morning, a bunch of big caps got halted. They blamed it on a technical error, is what they blamed it on, was a technical error. Now, I don't know how much truth that is. Again, they blamed it on a technical error. So, really interesting. I have no idea what happened this morning. I'll tell you this. I've been trading market for years. I've never seen anything like that happen. Every day I'm here. I trade. You guys know me. Anybody that's been around long enough knows I've been here for a long time. I've never seen anything like yesterday. Or never seen anything like this morning ever in the history of the stock market that I've experienced. I'm not saying it's never happened. But just weird. Something happened. Now, it could have been a cyber attack. It could have been, we don't know what it was. It could have been a cyber attack. It could have been just a human error. You know, both are plausible and possible, but we just don't know. Weird. Big companies too. 80+ big blue chips. ExxonMobil, Snapchat, Neo, it happened to a lot of different companies. Trading halts, yeah, a lot of them got halted. Fluctuated in price heavily too. A lot more power in the trend line. Yeah, so Microsoft's still sitting sideways. We got about 30 minutes. Accounts holding symbols undergoing corporate action will be disabled at 17:30, which is 5:30. Weird. Yeah, it was crazy. Yeah, people lost millions of dollars this morning. Don't get me wrong. Like, people lost millions this morning, man. That's the interesting part. I like this song too. I'm gonna figure out who this is. All right, we're at 194.50s. Flash crash of 2010. Honestly, I didn't trade in 2010, man. See, I didn't trade back then. I've only been trading for about 6 years, you know. But my point, and I've been here for a long time, meaning like I've traded every day for a while, you know. Yeah, I've traded every day for a while. You know what I mean? All right, Microsoft back over 250s. What are your views on the Fed meeting next month? I don't know. I really don't know. I hope it goes well. I hope he raises rates less aggressively and lowers rates. I hope he does 25 or 0. I know 0 is a long shot, but still, I mean, I hope he does. But nobody really knows what he's really going to do, and we can only speculate and guess. So I'm cautiously optimistic. I want the market to go up. Yeah, just weird. All right, guys, NVIDIA still moving here. We still got some time before the actual drop here. I saw a crazy plus minus 2% swing at the end of the day for the SPY, or $2. Yeah. Yeah, he's not raising rates super aggressively. I mean, again, a lot of people were mad at Jerome Powell for not raising rates enough. Like, they wanted him to raise rates more aggressively than he has been. So, again, just understand, like, it's a balancing game. You raise rates too much, you crash the market. You raise rates not enough, and long-term, you got inflation problems. And so it really is a balancing game. A lot of people would rather him raise rates more than he has been and just kind of rip the Band-Aid off. My guess is he doesn't really want to do that under his watch. Again, I really doubt he wants to do that under his watch. And so in that regard, you know, he's taken the small approach. But, you know, can't tell for sure. ECB will raise it 50 basis points without that the U.S. goes to 25. Maybe. Jay Powell has been slow to react and now reacts. Maybe, you know. Too much political pressure these days, much different than the 70s. Yeah, for sure. I can agree with that. Soft landing. Yeah, I mean, a lot of people think that we're actually going to get the soft landing now, too. I don't know personally. I don't know if we're going to do it again. What a soft landing is raising rates enough to discourage spending and help inflation, but not enough to cause a recession. Is what a soft landing is called. So I guess the big point of that is: do you think we're already in one? If you think we're already in one, we already then the soft landing has failed. But if you think we're not in one yet, then we're still possible to do one. It's still possible we do one. Can Q reach 295 tomorrow? I mean, it could. Will it is a different story. Let's look at the Q. NVIDIA on the left side here. All right, 250, 212s right now on the SPY, guys. 250, 212s. Still got 30 minutes here. 30 minutes, team. If exuberance sets in, we might see SPY at 450. Oof, I don't know, man. It's a big ask. All right, guys, we got we decided to switch up the beats, man. Shorts are gonna get slaughtered tomorrow. Maybe, man. I don't know, dude. I try to stay away from the sensationalism, man. I get so many people pulling me in different directions with the market. Some people say the market's gonna go up and the shorts are dumb, and then some people say the longs are dumb, and in the end, nobody knows. I don't think anything really matters yet. I think Tesla earnings are gonna be the biggest influence tomorrow. We don't really have any big economic data or anything. All right, 250, 220s. Tesla demand problem. Yeah, look at there's the Q on the left side. Here's Tesla. A lot of neutrality today in markets, guys. A lot of neutrality. Nothing really super crazy or anything in terms of movement. Right, for sure. Henry, 100%, man. And running a community like this, everybody, again, I try to stay away from really polarized viewpoints. Like we know for sure what's going to happen. Because frankly, nobody does, man. Nobody knows. We're all just guessing here, Yep. Market can run, can churn, can burn people. We don't really know what we're going to get. Again, we just got to be neutral. Neutrality is the way. saying actual inflation is really bad. Just go to the grocery store. Yeah, for sure. I mean, again, time will tell. All right, Microsoft's still trying to run up a little bit. There's my Discord. Again, 25 minutes. Crypto is running quite a bit. Yeah, crypto's been looking great, man. It really has been. Again, I'm glad to see it. I'd like crypto to do well. I mean, it's pulling back a little bit today, but it's still at just about 23,000. You know, so that's good, man. That's what we want. Thoughts on AT&T? I think AT&T is a decent dividend stock that probably will go up long term. My only like, I'm a skeptic in regards to like, okay, I'm skeptical of these cable companies because I think that streaming services are eating cable's lunch and they're just destroying cable companies. So I think a lot of these streaming services like Sling TV and all that stuff are going to be taking a lot of business away from these big cable companies like AT&T and Comcast and all that stuff, right? And so I think in that, companies like DirecTV are vulnerable, not just by phone services, but also by cable companies. So I think cable companies are vulnerable, phone services are vulnerable, and in that lies AT&T. Now, again, I don't know what's going to happen. I know, aside from that, I like AT&T, and I think they do pay dividends. And so I'm not all against it. But again, I'm skeptical. Best way to put it. Yeah, dividend pays out well. I mean, that's Microsoft starting to move up a little bit, guys. So we are starting to head up some here. We are starting to creep up. Let's see if we continue it. We're at 253s now. Let's see if we can break over 253s. Again, we are going to stream the full earnings call. Food too. I don't know about food, man. US 100 job, in your opinion, on market narrative, is it finally going bullish? I really don't know. I hope so. Like I said, I want the market to go well and do well and go up. But again, I don't know if it is, and I hope it is. But again, I also understand and recognize that nobody really knows for sure, and we're all just kind of speculating on market activity. So I hope the market goes up. I really do, but I don't know if it will. right, testing 253s right now. The earnings are actually out. You can read the earnings on the bottom of the screen here. So the actual earnings are released already. But the earnings call is what everybody's kind of waiting for here. Inflation doesn't bother me much when it comes to food. Yeah, I mean, Microsoft started to test 253s. John, how much would it push down if conference gives bad guidance? I don't know if they're going to release the guidance on the call, but I mean, it would drop. I don't know how much it would drop, but it's going to drop if it releases bad guidance, almost certainly. I mean, not you never know for sure, but like likelihood of it dropping on bad guidance is pretty high. Well, you can always check when you're reading earnings reports if you want to see like what the guidance was. Look for C's, any C's, this, C's that. That's kind of what you want to do. Microsoft always wait for the call to give guidance. Microsoft Corp recorded its slowest sales growth in more than 6 years. Last quarter's demand for its software and cloud services cooled, and concerns about the health of the global economy. Stocks have to be the most psychologically filled game in the world. It's a guessing game of how they will move. Yeah, for sure. Like I said, it really is. It's a fun game. Like I always like poker and strategy games. Is what I always like poker, checkers, chess. I always like those games. When you get older, you just kind of start playing the stock market. We're at 253s right now for Microsoft. Yeah, a lot of them are doing that, boss man, for sure. And the big one's going to be Tesla next tomorrow. All right, testing 253s. All right, so we're right at 253s now for Microsoft. You can see right here, Dish now runs their legacy through AT&T. Yeah, well, DirecTV is now AT&T. Is the big thing. And again, one of the ways you can get exposure to this stuff right now, guys, again, we got 2 sponsors here. People complained yesterday that we were promoting our sponsors, and it's like, come on now, man. I streamed for hours and hours. Today, just to put this into perspective, I have streamed for 7 hours today. After the stream will be over, this will be 7 hours. I've been talking to you traders, and I love you all. I appreciate y'all being here, but 7 hours, man. So you better believe I'm going to make my money while I do it. And so again, with that said, if you want to check out the market, if you want to get exposure to trading stocks, you can do so trading the futures market. Here's the futures market on the left. You can see very similar chart to Microsoft here. This is the futures contract of the S&P 500 on the left, and you can day trade futures without restriction, without a PDT rule. You can day trade short futures without restriction, without a PDT rule restriction. And, it's just one of the easiest ways to get exposure to day trading. Top Step is a sponsor of mine. They are a platform where they give you a demo. And if you can hit their target on their demo while following their rules and you pass their testing and phases, then they legitimately fund you $50,000 to $150,000 as a proprietary firm-like thing with a 90% split once you're funded. And I think a lot of people are not going to be able to get funded. Like I said, I try to be real with people. Most people are not going to be able to get funded. But the real value there is that it builds you into a better trader. Just taking that challenge, it's very cheap. The base package is less than $140 a month. That builds you into a better trader. Learning to follow the rules they give you, they've got a ton of resources, build you into a better trader. So again, if you want to check it out, try to get around the PDT rule, there is the link. Hey, thank you, Snow. Microsoft chart is bullish after hours ahead of the guidance. Yeah, well, the guidance, we don't know. We'll see. The chart is definitely bullish right now. This is definitely a strong looking chart. And again, we'll see if it holds. We got 15 minutes, guys. 15 minutes. We'll put a timer up here. And we got about 12 and a half minutes. Yeah, that'll work. All right. Yeah, that's right. So the paper, it depends on what paper. You could do the free trial of paper where that's just no pressure. You can just test out futures, or you could sign up for the Combine. If it's a Combine account, that's your testing account. So you got to hit their profit target. They should give you kind of instructions, all that stuff. All right, guys, we got 13 minutes. 13 minutes. All right, guys, Microsoft, we're at 253, 20s, still pumping up. Until the earnings call starts for Microsoft. The Microsoft earnings call is in about 12 minutes. All right, we're at 253.02s. Yeah, thanks, Ali B. We try, bro. Like I said, we try. Like I said, look, I spend time here for sure, but like I get paid to do it too. Like y'all, I do make money doing this, of course. And, that should be a reasonable expectation. I do get paid for it. No offense, but if I didn't get paid for it, I wouldn't be here. Which is understandable. I mean, look, are you gonna work without getting paid for somebody? No. I'm living my dream, man. I get to talk about the stock market, make good money doing it. Is Microsoft buying back? I don't know. I appreciate the fact that you get up and yeah, we get up early every day, man. Like I said, I'm a morning person though. Carol is not. I'm a morning person. Carol, my wife, is not a morning person at all. So it's like, and my dad's the same way. My son is the same way, bro. If y'all saw Jack wake up in the morning, bro, Jack gets up at the crack of dawn and plays video games. That's what I do. If y'all ever want to game with me at 6 a.m., I'm up. But my son is exactly the same. My son gets up super early and he just wants to play video games. It might be an ADD thing or an ADHD thing. I'm sure is probably what it is. It's some type of ADHD thing. Microsoft pulling back under 280 or 253s. You can also see, like, you might see me shaking. What it really is I'm just jumping my legs. Like, I have restless leg syndrome anytime I sit down. And so when I'm concentrating on something, I just kind of jump. My legs jump without me really even noticing it. So it's probably ADHD is what I'm assuming. Microsoft at 253s. I said bearish, but I'm an FX guy. I don't understand this much. I mean, you're just looking at the health of the market, you know. Yeah, my problem with cable companies, and I have a huge problem with Comcast, and this is why I also think they're going to struggle. All right, now they're really data companies. Is the first thing to understand about them. Is like companies like that, they're really data companies. But like Microsoft and DirecTV as well, the real problem with them is their structure of payment with their customer service reps. Like they pay their customer service reps commissions on sales and signups, and the huge problem with that is that they have a conflict of interest in. So it's like if you've ever dealt with Comcast or DirecTV, what happens is they'll be like, yeah, bro, it'll be $120 a month flat. You won't have to pay more than $120 a month. You'll get all this stuff $120 a month. No surprise fees. Like, okay, great. You sure it's $120 a month? Yeah, man, it's $120 a month. Don't worry about it. You get your bill and it's $220. And then you call them and you're like, yo, what the heck, man? You told me $120 a month. Oh, we never said that. Well, it's like, bro, I know y'all are recording these calls. Pull up the call. That's what y'all said. Oh, we don't have that capability. We can't do that. You know, and then they just kind of send you on hold and hold and hold. And it's like the people know they can't prove it. So they just kind of rack up commissions. And again, you should never pay customer service reps commissions, right? It's a conflict of interest. Like earning commissions and customer service are two different things. You know, customer service is a sales job, unless they're salesmen, which I guess, but the problem is that, and so they mislead you. DirecTV does it, Comcast does it, they all do it, and that's the main problem with them. And so I have no faith in them. I don't know how many times I've dealt with somebody. They're like, yeah, you're gonna pay $300 a month, $220 a month. Okay, great. I get my bill, it's $450. You know, and I'm like, okay, well, maybe it's just the first bill. Nope, every bill afterward is $450. I had one of them that promised me literally $90 a month. I got my bill, it was $200. When I called and I was like, yo, what the heck? Y'all promised me $90 a month. They just acted like they never did. And they got weird and they locked me into some contract. It's just absolutely ridiculous, man. Yeah. What time zone are you in, Paul? Let me see. You in Central? Yeah, I get up at 5:15. I get up at like 4:45 Central Standard Time. So I get up market wise, it's like 6:15. I start the stream. I get up at like 5:45 market time. Microsoft pulling back to 250, 250s. We'll see if it holds. All right, guys. Earnings call starts in 6 minutes. I am in Houston, Texas. I've heard the song in an advertisement. Honestly, one thing that's really been helping my trading, to be honest, guys, I feel like I need to show you guys this, is Chart Prime. You know, Chart Prime, super impressed with it right now. Super impressed with it. Again, look at Chart Prime today. All right, so Chart Prime is a sponsor of mine. All right, so I just put this out there. They're a sponsor of mine. Definitely biased in their favor. All right, they pay me commissions, and they're also a sponsor of mine. So they pay me, you know, they pay me money. But I feel like I need to show you guys just how accurate Chart Prime can be. Because today, number one, we made money on Top Step today, you know, using Chart Prime. But like, just look at how accurate they are, really quick. Like, look at this. Okay, so like, people can say whatever they want about them, but like, look at this. Okay, reversal up, and it's around support. We get a huge bounce. Bearish engulfing candle and reversal down, we get a huge drop. So they're an indicator circuit. You can use them stocks, crypto, forex, futures. They give you support and resistance lines, reversal signals. They show you where candlestick patterns are. They show you chart patterns, a lot of stuff. They have oscillators, but just look how accurate. Reversal down signal, drop. Reversal up signal, huge bounce. Reversal down signal up here, and we're running into a major support level they showed us. Big drop. Reversal up signal and a bunch of engulfing candles, big bounce. And again, they worked like almost 100% accuracy today. I didn't see one of their alerts that were wrong alone today. And I can't guarantee you're going to make money, but at least specifically today, they've been ridiculously accurate in terms of their indicators. Again, they're custom indicators on TradingView. You can use it in stocks, crypto, forex, futures. They're called Chart Prime. You can get 20% off if you use my link. They are a sponsor of mine. But again, I mean, no BS here. If you look at the SPY chart, if you have Chart Prime, pull up their market oracle and their candlesticks, and then look at the SPY chart. It was literally, again, I can't see anything on here that was wrong. And honestly, the tool can help you learn the patterns yourself, so you don't need the tool in the future. Like, look, again, where were they wrong? Seriously, they pulled back. They documented the support of the range. You see reversal up, bearish engulfing candle down, reversal up, bounce, reversal down, drop, reversal down, drop, reversal down, drop, reversal up, bounce. Reversal down, drop, reversal up, bounce. And these don't repaint. And then here, reversal up, bounce, reversal down, drop. Literally after their earnings too. So surprising, man. Really surprising. Yes, Henry. Well, they show up after the candlestick that doesn't. But they show up while you're like live. They don't just show up at the end of every day. They show up. They don't repaint either. The reversal indicators don't repaint. So they won't change to something else after they do it or like fix it so where it looks like in hindsight. They'll give you the alert live. All right, guys, less than 2 minutes. All right, guys, let's get the Microsoft earnings call started here. Oh, I got it right here. All right. Now we are on hold for Microsoft here, patiently waiting for Microsoft. I'm going to turn the music off, and then I'm going to also mute the music so we can just kind of chill and wait, and I can press play so you guys can know as soon as it comes out. All right, big move coming in 1 minute. I don't know. We're gonna listen to the actual earnings call though. So we're gonna sit here and listen to the actual earnings call. Again, hit the sub button. We cover all the big stuff here. We cover Microsoft earnings. We cover Tesla earnings tomorrow. We cover all the big stuff here, guys. So hit that sub button. Hit the notification bell. We appreciate it. They've got terrible hold music, but that's all right. And you guys could hear the music prior to this, right? Again, I'll put it up as soon as it starts. We're waiting for it to start right now. We do Tesla earnings. Yeah, we're going to cover Tesla earnings tomorrow as well. We cover all the major, like, listen, we cover Microsoft earnings. We cover all the big stocks earnings. So top 10, top 20 stocks, Tesla, Microsoft, Snapchat, Google, Apple, Disney, everything big like that. We cover it. We also cover Jerome Powell press conferences, rate hike decisions, CPI, PPI, jobless claims. GDP is this week. So we got GDP Thursday, I believe is Thursday. We have GDP reports. We've got Like I said, producer price index, we cover non-farm payroll numbers. Like we stream it all live as soon as it comes out. Thousands of people tune into the big streams because, again, we cover it very, very quickly as soon as it comes out. We've got some sources. I'm not going to tell you my sources, but for economic data, we cover it very fast. All right, I believe they just started. Yep, they did.
And welcome to the Microsoft Fiscal Year
Sound check.
2023 second quarter earnings conference call.
Sound check.
At this time, all participants are in a listen-only mode. A question and answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press *0 on your telephone keypad. As a reminder, this conference is being recorded. I would now like to turn the conference over to your host, Brett Iverson, Vice President, Investor Relations.
Good afternoon, and thank you for joining us today. On the call with me are Satya Nadella, Chairman and Chief Executive Officer, Amy Hood, Chief Financial Officer, Alice Jalla, Chief Accounting Officer, and Keith Dolliver, Deputy General Counsel. On the Microsoft Investor Relations website, you can find our earnings press release and financial summary slide deck, which is intended to supplement our prepared remarks during today's call and provides the reconciliation of differences between GAAP and non-GAAP financial measures. On this call, we will discuss certain non-GAAP items. The non-GAAP financial measures provided should not be considered as a substitute for or superior to the measures of financial performance prepared in accordance with GAAP. They are included as additional clarifying items to aid investors in further understanding the company's second quarter performance, in addition to the impact these items and events have on the financial results. All growth comparisons we make on the call today relate to the corresponding period of last year, unless otherwise noted. We will also provide growth rates in constant currency when available, as a framework for assessing how our underlying businesses performed, excluding the effect of foreign currency rate fluctuations. Where growth rates are the same in constant currency, we will refer to the growth rate only. We will post our prepared remarks to our website immediately following the call until the complete transcript is available. Today's call is being webcast live and recorded. If you ask a question, it will be included in our live transmission, in the transcript, and in any future use of the recording. You can replay the call and view the transcript on the Microsoft Investor Relations website. During this call, we'll be making forward-looking statements, which are predictions, projections, or other statements about future events. These statements are based on current expectations and assumptions that are subject to risks and uncertainties. Actual results could materially differ because of factors discussed in today's earnings press release, in the comments made during this conference call, and in the risk factors section of our Form 10-K, Forms 10-Q, and other reports and filings with the Securities and Exchange Commission. We do not undertake any duty to update any forward-looking statement. And with that, I'll turn the call over to Satya.
Thank you very much, Brett. I want to start with the context I shared with our employees last week on the changing environment and our priorities. As I meet with customers and partners, a few things are increasingly clear. Just as we saw customers accelerate their digital spend during the pandemic, we are now seeing them optimize that spend. Also, organizations are exercising caution given the macroeconomic uncertainty. And the next major wave of computing is being born as we turn the world's most advanced AI models into a new computing platform. In this environment, we remain convicted on three things. This is an important time for Microsoft to work with our customers, helping them realize more value from their tech spend and building long-term loyalty and share position, while internally aligning our own cost structure with our revenue growth. This in turn sets us up to participate in the secular trend where digital spend as a percentage of GDP is only going to increase. And lastly, we're going to lead in the AI era, knowing that maximum enterprise value gets created during platform shifts. With that as the backdrop, the Microsoft Cloud exceeded $27 billion in quarterly revenue, up 22% and 29% in constant currency. Now I'll highlight examples of our innovation, starting with Azure. Moving to the cloud is the best way for any customer in today's economy to mitigate demand uncertainty and energy costs while gaining efficiencies of cloud-native development. Enterprises have moved millions of cores to Azure and run twice as many cores on our cloud today than they did 2 years ago. And yet, we're still in the early innings when it comes to long-term cloud opportunity. As an example, insurer AIA was able to save more than 20% by migrating to Azure and reduced IT provisioning time from multiple months to just an hour. We also continue to lead with hybrid computing with Azure Arc. We now have more than 12,000 Arc customers, double the number a year ago, including companies like Citrix, Northern Trust, and PayPal. Now on to data. Customers continue to choose and implement the Microsoft Intelligent Data Platform over the competition because of its comprehensiveness, integration, and lower cost. Bayer, for example, used the data stack to evaluate results from clinical trials faster and more efficiently while meeting regulatory requirements, and ASOS chose Cosmos DB to power real-time product recommendations and order processing for over 26 million global customers. Now on to AI. The age of AI is upon us, and Microsoft's powering it. We are witnessing nonlinear improvements in capability of foundation models, which we are making available as platforms. And as customers select their cloud providers and invest in new workloads, we are well positioned to capture that opportunity as a leader in AI. We have the most powerful AI supercomputing infrastructure in the cloud. It's being used by customers and partners like OpenAI to train state-of-the-art models and services, including ChatGPT. Just last week, we made our Azure OpenAI service broadly available, and already over 200 customers from KPMG to Al Jazeera are using it. We will soon add support for ChatGPT, enabling customers to use it in their own applications for the first time. And yesterday, we announced the completion of the next phase of our agreement with OpenAI. We are pleased to be their exclusive cloud provider and will deploy their models across our consumer and enterprise products as we continue to push the state-of-the-art in AI. All of this innovation is driving growth across our Azure AI services. Azure ML revenue alone has increased more than 100% for 5 quarters in a row, with companies like AXA, FedEx, and H&R Block choosing the service to deploy, manage, and govern their models. Now on to developers. Modernizing applications is mission critical to any company's operations today. And with GitHub Visual Studio and Azure PaaS services, we have the most comprehensive portfolio of tools to help. GitHub is now home to 100 million developers, and GitHub Copilot is the first at-scale AI product built for this era, fundamentally transforming developer productivity. More than 1 million people have used Copilot to date. This quarter, we brought Copilot to businesses, and we have seen strong interest and early adoption from companies including Duolingo, Lemonade, and Volkswagen CARIAD Software Group. Now on to Power Platform. Power Platform is becoming an essential digital transformation tool as every business looks to streamline their operations and drive productivity in today's environment. We are helping customers realize superior time to value with our end-to-end suite spanning low-code, no-code tools, automation, virtual agents, and business intelligence. We are leading in robotic process automation. Power Automate has more than 45,000 customers from AT&T to Robobank, up over 50% year over year. And we are making it easier for anyone to streamline repetitive tasks, introducing new AI-powered features to turn natural language prompts into complex workflows. Now on to business applications. Dynamics 365 is taking share as we help businesses digitize their service, finance, customer experience, and supply chain functions. For example, J&J Pepsi-Cola Bottles is moving from reactive to predictive field service. Fujifilms is optimizing its operations. Investec is closing deals faster with conversational intelligence. Baylor Scott & White in Texas is using our digital contact center to enhance patient communications. And this quarter, we introduced our new supply chain platform, helping customers like iFit and Kraft Heinz apply AI to predict and mitigate disruptions. Now on to industry solutions. Our industry and cross-industry clouds are driving pull-through for our entire tech stack. Our cloud for retail was front and center at NRF last week as we introduced new tools to help retailers manage their day-to-day operations and digitize their physical stores. Polish retailer Żabka has built the largest chain of autonomous stores in Europe with the help of our technology. In financial services, our new partnership with London Stock Exchange Group will deliver next generation of data analytics and workspace solutions. And in healthcare, we are rapidly becoming the partner of choice for any provider looking to generate real value from AI. With nuanced DAX, ambient intelligence solutions, physicians can reduce documentation time by half, improving the quality of their patient interactions. Now on to systems of work. Microsoft 365, Teams, and Viva are essential for every organization to adapt to the new world of work. Microsoft 365 is rapidly evolving into an AI-first platform that enables every individual to amplify their creativity and productivity with both our established applications as well as new applications like Designer, Stream, and Loop. We have more than 63 million consumer subscribers, up 12% year over year, and we introduced Microsoft 365 Basic, bringing our premium offerings to more people. Teams surpassed 280 million monthly active users this quarter, showing durable momentum since the pandemic, and we continue to take share across every category from collaboration to chat to meetings to calling. Teams has emerged as a first-class platform. Apps from Adobe, Atlassian, Poly, ServiceNow, and Workday have each surpassed 500,000 active users, and the number of third-party apps with more than 10,000 users increased nearly 40% year over year. There are more than 500,000 active Teams Rooms devices, up 70% year over year, and the number of customers with more than 1,000 rooms doubled year over year. Novo Nordisk will deploy Teams Rooms to 5,000 meeting rooms globally in our largest deal to date. Teams Phone continues to take share and is the market leader in cloud calling. We've added more than 5 million PSTN seats over the last 12 months alone. With Teams Premium, we are meeting enterprise demand for advanced features like end-to-end encryption and AI-powered recaps. We have seen strong interest in preview, and we will make it broadly available next month. With Microsoft Viva, we have created a new market category for employee experience and organizational productivity. US Bank is using Viva to streamline employee communications, and Carlsberg turned to Viva to centralize its digital employee experience for 29,000 employees. In today's environment, aligning the entire organization on the most important work is critical. Viva Goals brings objectives and key results directly into the flow of daily work. Viva has also become an indispensable tool for business process. Viva Sales is the super app in Microsoft 365 for sellers. We have seen strong interest since making it generally available this quarter. All up, we continue to see organizations consolidate on Microsoft 365. 80% of our enterprise customers use 5 or more Microsoft 365 applications, and organizations across the private and public sector, including EY, IKEA, NTT Communications, Rio Tinto, as well as the state government of Virginia, are increasingly choosing our premium E5 offerings for advanced security, compliance, voice, and analytics. Now on to Windows. While the number of PCs shipped declined during the quarter, returning to pre-pandemic levels, usage intensity of Windows continues to be higher than pre-pandemic, with time spent per PC up nearly 10%. Monthly active devices also reached an all-time high this quarter. And for commercial customers, Windows 11 adoption continues to grow because of its differentiated security and productivity value proposition. We're also seeing growth in cloud-delivered Windows, with usage of Windows 365 and Azure Virtual Desktop up by over 2/3 year over year. Leaders in every industry, from Campari and Grant Thornton UK to Nutrien and Woolworths, are using cloud-delivered Windows, including more than 60% of the Fortune 500. Now on to security. Over the past 12 months, our security business surpassed $20 billion in revenue as we help customers protect their digital estate across clouds and endpoint platforms. We're the only company with integrated end-to-end tools spanning identity, security, compliance, device management, and privacy, informed and trained on over 65 trillion signals each day. We're taking share across all major categories we serve. Customers are consolidating on our security stack in order to reduce risk, complexity, and cost. The number of organizations with 4 or more workloads increased over 40% year over year. UK retailer Fraser Group, for example, consolidated from 10 security vendors to just Microsoft. Roku moved identity and access management to the cloud with Azure Active Directory. and Estella Pharma, Ferrovial, and University of Toronto all switched to Microsoft Sentinel because of our integrated XDR and SIM capabilities. Now on to LinkedIn. People and companies continue to look to LinkedIn to connect, learn, sell, and get hired. We once again saw record engagement among our more than 900 million members. 3 members are signing up every second. Over 80% of these members are from outside the United States. And as the members come to the platform to find and share professional knowledge and expertise, newsletter creation was up 10x year over year. Skills are the new currency, and people are increasingly investing in their skill building to keep up with their changing roles and industries. We offer more than 20,000 courses in 11 languages, and companies are also turning to a skills-based approach in place of degree or pedigree to identify qualified talent, with more than 45% of the hires on LinkedIn explicitly using skills data to fill their roles. Finally, LinkedIn Marketing Solutions continues to be a leader in B2B digital advertising, helping companies deliver the right message to the right audience on a safe and trusted platform. Now on to advertising. Despite headwinds in the ad market, we continue to innovate across our first and third-party portfolios. Our browser, Microsoft Edge, gained share for the 7th consecutive quarter. Bing continues to gain share in the United States, and daily users of our Start personalized content feed increased over 30% year over year. We are now empowering retailers and expanding our third-party inventory. With Promote IQ, we're building a complete omni-channel media platform for companies like the Australian retailer Endeavour, as well as Canada's Hudson's Bay and Globo, the largest Brazilian TV broadcasters, chose Xandr to launch a new media buying platform in that market. Now on to gaming. In gaming, we continue to pursue our ambition to give players more choice to play great games wherever, whenever, and however they want. We saw new highs for Game Pass subscriptions, game streaming hours, and monthly active devices. And monthly active users surpassed a record 120 million during the quarter. We continue to invest to add value to Game Pass. This quarter, we partnered with Riot Games to make the company's PC and mobile games, along with premium content, available to subscribers. And finally, we are energized by our upcoming lineup of AAA game launches, including exciting new titles from ZeniMax and Xbox Game Studios, and we'll be sharing details and gameplay at our showcase tomorrow. In closing, I want to extend my deepest gratitude to our employees for their continued dedication to our mission, customers, and partners. We will continue to pursue our long-term opportunity and innovation agenda with urgency, while also raising the bar on our operational excellence. With that, I'll hand it over to Amy.
Thank you, Satya, and good afternoon, everyone. I'd like to start by reiterating Satya's thoughts on the changing environment and our priorities, which underpin the decisions communicated in last week's announcement. The resulting Q2 charge negatively impacted gross margin by $152 million, operating income by $1.2 billion, and earnings per share by 12 cents. Our second quarter revenue was $52.7 billion, up 2% and 7% in constant currency. When adjusted for the charge, gross margin dollars increased 2% and 8% in constant currency. Operating income decreased 3% and increased 6% in constant currency, and earnings per share was $2.32, which decreased 6% and increased 2% in constant currency. In our consumer business, the PC market was in line with our expectations, but execution challenges impacted our Surface business. Advertising spend declined slightly more than expected, which impacted search and news advertising and LinkedIn Marketing Solutions. In our commercial business, we delivered strong growth in line with our expectations. However, as you heard from Satya, we are seeing customers exercise caution in this environment, and we saw results weaken through December. We saw moderated consumption growth in Azure and lower than expected growth in new business across the standalone Office 365, EMS, and Windows commercial products that are sold outside the Microsoft 365 suite. From a geographic perspective, we saw strong execution in many regions around the world. However, performance in the US was weaker than expected. Importantly, we continued to see share gains in areas such as data and AI, Dynamics, Teams, security, and Edge. Commercial bookings increased 7% and 4% in constant currency, lower than expected. consistent execution across our renewal sales motions, including strong recapture rates and growth in Azure commitments on a high prior year comparable, were partially offset by the slowdown in growth of new standalone business noted earlier. Commercial remaining performance obligation increased 29% and 26% in constant currency to $189 billion. Roughly 45% will be recognized in revenue in the next 12 months, up 24% year over year. The remaining portion, which will be recognized beyond the next 12 months, increased 32%. Our annuity mix increased 2 points year over year to 96%. FX decreased total company revenue by 5 points in line with expectations. At a segment level, FX decreased productivity and business processes revenue growth by 6 points, 1 point favorable to expectations. FX impact on intelligent cloud and more personal computing were both in line with expectations. Additionally, FX decreased both COGS and operating expense growth by 2 points, 1 point unfavorable to expectations. Microsoft Cloud revenue was $27.1 billion and grew 22% and 29% in constant currency, ahead of expectations. Microsoft Cloud gross margin percentage increased roughly 2 points year over year to 72%, a point better than expected, driven by lower energy costs. Excluding the impact of the change in accounting estimate for useful lives, Microsoft Cloud gross margin percentage decreased roughly 1 point, primarily driven by sales mix shift to Azure. Company gross margin percentage was 67%. Excluding the impact of the change in accounting estimate, gross margin percentage decreased roughly 2 points, driven by a lower mix of Windows OEM revenue and sales mix shift from licensing to cloud. Operating expense, when adjusted for the Q2 charge, increased 11% and 13% in constant currency, about $500 million lower than expected. Operating expense growth was driven by investments in cloud engineering, the Nuance acquisition, and LinkedIn. At a total company level, headcount ended December 19% higher than a year ago. Sequential headcount growth was less than 1%. Year-over-year growth included roughly 6 points from the Nuance and Xandr acquisitions, which closed last Q3 and Q4 respectively. Adjusted for the charge, operating margins decreased roughly 2 points year-over-year to 41%. Excluding the impact of the change in accounting estimate, operating margins declined roughly 4 points, primarily driven by unfavorable FX impact, as well as a lower mix of OEM revenue. Now to our segment results. Revenue from productivity and business processes was $17 billion and grew 7% and 13% constant currency, in line with expectations when excluding the favorable FX impact noted earlier. Office commercial revenue grew 7% and 14% in constant currency. Office 365 commercial revenue increased 11% and 18% in constant currency, slightly better than expected, with healthy renewal execution and ARPU growth as E5 momentum remains strong. Paid Office 365 commercial seats grew 12% year over year, with installed base expansion across all workloads and customer segments. Seat growth was driven by our small and medium business and frontline worker offerings, although we saw some impact from the slowdown in growth of new business noted earlier. Office consumer revenue declined 2% and increased 3% in constant currency, with continued momentum in Microsoft 365 subscriptions, which grew 12%, 63.2 million, partially offset by declines in our transactional business. LinkedIn revenue increased 10% and 14% in constant currency, driven by growth in talent solutions, partially offset by weakness in marketing solutions from the advertising trends noted earlier. Dynamics revenue grew 13% and 20% in constant currency, driven by Dynamics 365, which grew 21% and 29% in constant currency. Segment gross margin dollars increased 8% and 16% in constant currency, and gross margin percentage increased roughly 1 point year over year. Excluding the impact of the change in accounting estimate, gross margin percentage decreased slightly, driven by sales mix shift to cloud offerings. Operating expense increased 12% and 14% in constant currency, including roughly 5 points from the Q2 charge. Operating income increased 6% and 17% in constant currency, as the 3 points of favorable impact due to the change in accounting estimate were offset by 3 points of unfavorable impact from the Q2 charge noted earlier. Next, the Intelligent Cloud segment. Revenue was $21.5 billion, increasing 18% and 24% in constant currency, in line with expectations. Overall, server products and cloud services revenue increased 20% and 26% in constant currency. Azure and other cloud services revenue grew 31% and 38% in constant currency. As noted earlier, growth continued to moderate, particularly in December, and we exited the quarter with Azure constant currency growth in the mid-30s. In our per-user business, the enterprise mobility and security installed base grew 16% to over 241 million seats, with impact from the slowdown and growth of new business noted earlier. In our on-premises server business, revenue decreased 2% and increased 2% in constant currency, with continued hybrid demand offset by weakness in transactional licensing. Enterprise services revenue grew 2% and 7% in constant currency. Segment gross margin dollars increased 17% and 23% in constant currency, and gross margin percentage decreased slightly. Excluding the impact of the change in accounting estimate, gross margin percentage declined roughly 3 points, driven by sales mix shift to Azure and higher energy cost. Operating expenses increased 34% and 37% in constant currency, including roughly 13 points of impact from the Q2 charge noted earlier, and roughly 7 points of impact from the Nuance acquisition. Operating income grew 7% and 15% in constant currency, as roughly 7 points of favorable impact of the change in accounting estimate was offset by approximately 7 points of unfavorable impact from the Q2 charge. Now to more personal computing. Revenue was $14.2 billion, decreasing 19% and 16% in constant currency, below expectations, driven by Surface, Windows Commercial, and Search. Windows OEM revenue decreased 39% year over year, in line with expectations. Excluding the impact from the Windows 11 deferral last year, revenue declined 36% on a strong prior year comparable. Devices revenue decreased 39% and 34% in constant currency, below expectations due to execution challenges on new product launches. Windows commercial products and cloud services revenue declined 3% and increased 3% in constant currency, lower than expected, primarily due to the slowdown in growth of new business and standalone offerings noted earlier. Search and news advertising revenue ex-TAC increased 10% and 15% in constant currency, a bit lower than expected, as noted earlier. Our Edge browser gained more share than expected this quarter. The Xandr acquisition contributed roughly 6 points of benefit. And in gaming, revenue declined 13% and 9% in constant currency, in line with expectations. Xbox hardware revenue declined 13% and 9% in constant currency. Xbox content and services revenue declined 12% and 8% in constant currency, given the strong first-party content last year. Segment gross margin dollars declined 29% and 24% in constant currency, and gross margin percentage decreased roughly 7 points year over year, driven by lower device gross margin and sales mix shift to lower margin businesses. Operating expenses increased 6% and 9% in constant currency, including roughly 6 points of impact from the Q2 charge noted earlier, and 3 points of impact from the Xandr acquisition. Operating income decreased 47% and 40% in constant currency, including roughly 6 points of unfavorable impact from the Q2 charge noted earlier. Now back to total company results. Capital expenditures, including finance leases, were $6.8 billion to support cloud demand. Cash paid for PP&E was $6.3 billion. Cash flow from operations was $11.2 billion, down 23% year over year, as strong cloud billings and collections were more than offset by a tax payment related to the TCJA capitalization of R&D provision, as well as higher employee and supplier payments. Free cash flow was $4.9 billion, down 43% year over year. Excluding the impact of this tax payment, cash flow from operations declined 7% and free cash flow declined 16%. This quarter, other income and expense was negative $60 million, lower than anticipated, driven by a mark-to-market loss on a forward share purchase agreement. Our effective tax rate was approximately 19%. And finally, we returned $9.7 billion to shareholders through share repurchases and dividends. Now, moving to our Q3 outlook, which, unless specifically noted otherwise, is on a US dollar basis. My commentary for both the full year and next quarter does not include any impact from Activision. which we continue to work towards closing in fiscal year 2023, subject to obtaining required regulatory approvals. First, FX. Based on current rates, we now expect FX to decrease total revenue growth by approximately 3 points, COGS growth by 1 point, and operating expense growth by 2 points. Within the segments, we anticipate roughly 4 points of negative impact on revenue growth in productivity and business processes, 3 points in intelligent cloud, and 2 points in more personal computing. In our consumer business, Windows OEM and devices will see continued declines as the PC market returns to pre-pandemic levels. And LinkedIn and search will be impacted as ad market spending remains a bit cautious. In our commercial business, we expect business trends that we saw at the end of December to continue into Q3. While customers are more cautious in their spend, we also have the opportunity to improve our execution, given our strong position in durable growth markets. In commercial bookings, with a declining expiry base and a strong prior year comparable in terms of large Azure contracts, we expect growth to be relatively flat year over year. We expect consistent execution across our core annuity sales motions, and continued commitments to our platform will be offset by impact from the slowdown of new business noted earlier, and 3 points of unfavorable impact from the inclusion of Nuance in the prior year. Microsoft Cloud gross margin percentage should be up roughly 1 point year over year, driven by the accounting estimate change noted earlier. Excluding that impact, Q3 cloud gross margin percentage will decrease roughly 1 point, driven by Azure. In capital expenditures, we expect a sequential increase on a dollar basis with normal quarterly spend variability in the timing of our cloud infrastructure build-out. Our data center investments continue to be based on a near-term and longer-term customer demand, including AI opportunities. Next, segment guidance. In productivity and business processes, we expect revenue to grow between 11 and 13% in constant currency, or $16.9 to $17.2 billion US dollars. In Office Commercial, revenue growth will again be driven by Office 365 with seat growth across customer segments and ARPU growth through E5. We expect Office 365 revenue growth to be sequentially lower by roughly 1 point on a constant currency basis. In our on-premises business, we expect revenue to decline in the mid-20s. In Office Consumer, we expect revenue growth in the low single digits, driven by Microsoft 365 subscriptions. For LinkedIn, we expect mid-single-digit revenue growth with continued strong engagement on the platform, although impacted by the advertising trends noted earlier and a slowdown in hiring, particularly in the technology industry, where we have significant exposure. And in Dynamics, we expect revenue growth to be in the low to mid-teens, driven by continued growth in Dynamics 365, which is now over 80% of total Dynamics revenue. For Intelligent Cloud, we expect revenue to grow between 17 and 19% in constant currency, or $21.7 to $22 billion US dollars. Revenue will continue to be driven by Azure, which, as a reminder, can have quarterly variability, primarily from our per-user business and from in-period revenue recognition, depending on the mix of contracts. In Azure, our per-user business should continue to benefit from Microsoft 365 suite momentum, though we expect continued moderation in growth rate given the size of the installed base. As I noted earlier, we exited Q2 with Azure growth in the mid-30s in constant currency, and from that, we expect Q3 growth to decelerate roughly 4 to 5 points in constant currency. FX impact in Azure is about a point more than at the segment level. In our on-premises server business, we expect revenue to decline low single digits as demand for our hybrid solutions will be more than offset by unfavorable FX impact. And in enterprise services, revenue should decline low to mid-single digits, driven by Microsoft consulting services. In more personal computing, we expect revenue of 11.9 to 12.3 billion US dollars. Windows OEM revenue should decline in the mid to high 30s in line with the PC market. We expect Q3 PC units to be similar to pre-pandemic levels. In devices, revenue should decline in the mid 40s as we work through the execution challenges noted earlier. In Windows commercial products and cloud services on a strong prior year comparable, revenue should be relatively flat as customer demand for Microsoft 365 and our advanced security solutions will be partially offset by the slowdown in new business noted earlier. Search and news advertising ex-TAC should grow high single digits, roughly 7 points faster than overall search and news advertising revenue, driven by continued volume strength, supported by Edge browser share gains and the inclusion of Xandr. And in gaming, on a prior year comparable that benefited from increased console supply, we expect revenue to decline in the high single digits. We expect Xbox content and services revenue to decline in the low single digits, as growth in Xbox Game Pass subscriptions will be more than offset by lower monetization per hour in third-party and first-party content. Now back to company guidance. We expect COGS to grow between 1% and 2% in constant currency, or to be between 15.65 and 15.85 billion US dollars, and operating expense to grow between 11 and 12% constant currency, or be 14.7 to 14.8 billion US dollars. Other income and expense should be roughly $200 million, as interest income is expected to more than offset interest expense. As a reminder, we are required to recognize mark-to-market gains and losses on our equity portfolio, which can increase quarterly volatility. We expect our Q3 effective tax rate to be between 19 and 20%. And finally, as a reminder for Q3 cash flow, we expect to make a $1.2 billion cash tax payment related to the TCJA capitalization of R&D provision. Now, some thoughts on H2 and the full year. First, in our commercial business, revenue grew 20% on a constant currency basis in H1. However, we now expect to see a deceleration in H2, given how we exited December. Next, higher energy costs for the full year are now expected to be $500 million compared to our previous estimate of $800 million. Third, as we continue to prioritize our investments and anniversary the Nuance and Xandr acquisitions, our Q4 operating expense growth should be in the low single digits in constant currency. Finally, we remain committed to operational excellence, aligning cost and growth, investing in our customers' success, and leading the AI platform wave. As a result, when excluding the Q2 charge and favorable impact from the change in accounting estimate, we expect full year operating margins to be down roughly 1 point in constant currency and roughly 2 points in USD, even with the headwinds from materially lower OEM revenue and higher energy cost. In the first half of the year, over 70% of our revenue came from our commercial business, and over 70% of that from Microsoft Cloud. We have a resilient foundation and durable growth markets where we are gaining share. I'm confident in the ability of our Microsoft team to manage the near term by continuing to position ourselves for the future. With that, let's go to Q&A. Brett.
Thanks, Amy. We'll now move over to the Q&A. Out of respect for others on the call, we request that participants please only ask one question. Joe, can you please repeat your instructions?
Ladies and gentlemen, at this time, we will be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad, and a confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. One moment, please, while we poll for questions. Our first question comes from the line of Keith Weiss with Morgan Stanley. Please proceed.
Excellent. Thank you guys for taking the question. I was hoping we could delve into the expansion of the investment into OpenAI. Satya, I was hoping you could talk to us about, is there any expansion in the scope of what you guys are doing with OpenAI and the commitment that you guys are making in terms of sort of the compute capacity you're going to be giving to them? And then maybe as from an investor's perspective, how should we think about when this functionality is going to become expand beyond just sort of the Azure OpenAI services, and where we're going to start to see some of the positive impacts to perhaps Bing or the productivity suite, or more broadly across the solution portfolio?
Thank you so much, Keith, for the question. So, as you know, we started the OpenAI partnership, now in 3 years, 3.5 years ago, and we've been actually working very hard on a lot of elements of this partnership over the last 3 years. And so I think the way for our investors to see this is we fundamentally believe that the next big platform wave, as I said, is going to be AI. And we strongly also believe a lot of the enterprise value gets created by just being able to catch these waves and then have those waves impact every part of our tech stack and also create new solutions and new opportunities. So whenever we think about platform opportunities and platform shift opportunities, that's how we come at it. How can we essentially ride the wave for everything that we have today and make it more expansive? And then what new can we create? So if you take that lens, the core of Azure, or what is considered cloud computing, fundamentally changes in its nature and how compute, storage, and network come together. That's in some sense under the radar, if you will. For the last 3.5, 4 years, we've been working very, very hard to build both the training supercomputers and now, of course, the inference infrastructure. Because once you use AI inside of your applications, it goes from just being training heavy to inference. So that's sort of, I think, core Azure itself is being transformed, but the core infrastructure business is being transformed. And so you can see us, with data beyond Azure OpenAI services. Even think about what Synapse plus OpenAI APIs can do. We already have in Power Platform incorporated capability. You can prompt a workflow. I mean, one of the reasons why we're the leaders in robotic process automation and workflow automation today is because of some of the AI capabilities that we have in there. GitHub Copilot is, in fact, you would say, the most at-scale LLM-based product out there in the marketplace today. And so we fully expect us to sort of incorporate AI in every layer of the stack, whether it's in productivity, whether it's in our consumer services. And so we're excited about it. But I think that we're also excited about OpenAI's own innovation, right? So they commercialize their products. We're excited about the ChatGPT being built on Azure and having the traction it has. So we look to, both there's an investment part to it and there's a commercial partnership, but fundamentally it's going to be something that's going to drive, I think, innovation and competitive differentiation in every one of the Microsoft solutions by leading in AI.
Outstanding. Thank you, guys.
Thanks, Keith. Joe, next question, please.
Our next question comes from the line of Brent Thill with Jefferies. Please proceed.
Thanks. Satya, can you give us your overall macro view? There were some comments you had made that concerned, I think, many about the state of the U.S. Spending environment. I'm just curious if you could comment and follow up on what you're seeing there just from a spend environment throughout the year. I think many came away with that perceiving that you were saying it's getting worse, not better. Can you just give us a little more color on that? Thank you.
No, thank you, Brenton. First of all, I was making a comment which is sort of a global comment, not just a specific U.S. comment. I mean, I always sort of subscribe to that there's only one law of gravity that I think all of us are subject to, which is inflation-adjusted economic growth in the world. And then how many times that do we grow? Because as I said even in my comment, Brent, I fundamentally believe, tech as a percentage of GDP is going to be much higher. And on a secular basis. So the question is, how many times is it given the overall inflation-adjusted economic growth? So that's kind of how I look at it. Given that, I think the two things that we see, we commented on that even in the last quarter, and it's even in the outlook, which is the thing that customers are doing is what they accelerated during the pandemic. They're making sure that they're getting most value out of it or optimizing it. And then also being a bit more cautious on given the macroeconomic headwinds out there in the market. So given those two things, the point is the optimizations will end. In fact, the money that they save in any optimization of any workload is what they'll plow into workloads. And those workloads will start ramping up. And so one of the key things we are watching for, Brent, is to make sure that we are gaining share in this phase through our value propositions, and even build loyalty with our customers, so that long term we are well positioned for share gains. So that's sort of fundamentally how we view it. And then the other aspect I'd also say is simultaneously investing in this new AI trend, because I don't think any application start that happens next is going to look like the application starts of 2019 or 2020. They're all going to have
considerations around how is my AI inference performance, cost, models going to look like. And that's where we are well positioned again. So that's how I view it. The market, you all are better readers of, quite frankly, what's happening out there. We can tell you what we see. What we see is optimization and some cautious approach to new workloads, and that'll cycle through. But we do fundamentally believe on a long-term basis, as a percentage of GDP, tech spend is going to go up.
Thank you.
Thanks, Brent. Joe, next question, please.
Our next question comes from the line of Mark Mordler with Bernstein. Please proceed.
Thank you very much. I'd like to follow up a little bit on this question relating to optimization. I know we saw some slowing this quarter. You're guiding to some slowing next quarter in cloud and Azure. How much of that do you believe at this point is truly people optimizing what they've already bought and stepping back before that, versus how much of that is due to macro factors themselves specifically impacting demand?
I'd say two things, and then Amy, please feel free to add. One is, it absolutely starts with workloads that they have at scale, just because of the visibility one has on what's driving essentially the consumption meters. And there's real guidance that we ourselves emit in the product to say, here are the things that you could do to optimize your billing. And so that's sort of what is the fundamental thing. When we say do more with less and how can we help, that's sort of the first place customers go to. And then the next piece really, I think, is going to be about how do they take the optimization that they get and the savings they get in one workload and what new project starts. And that's when I think there's reprioritization. When should we start the new project? Those are the two things that are happening simultaneously. They don't perfectly match, but one of the things is they're looking to bank some savings on some workloads and then start. So that's where I think a little bit of what has to happen is a cycle time where the optimization cycle finishes, the projects start, and then the projects ramp. And I think that's what, at least on the cloud consumption side, you're seeing. And on the per user side, it's slightly different, which is in per user also, there was real acceleration in terms of purchases of per user licenses, whether it is for knowledge workers or frontline workers. And again, they're all now making sure that they're all getting used, and the usage is going up. Like when we look at our Office 365 usage, all those numbers are pretty, up year over year in a substantial way. Like I gave you some of the Teams numbers. In fact, one of the things was what will happen to Teams usage after pandemic. Guess what? They're up. And so that's good news. And now once we cycle through that again, the seats will get added and premium. Like I'm very, very excited about Teams Pro coming out in a couple of weeks. And those are all the things that we will be able to sort of use to, ensure that the ARPUs are also going up with value.
And Mark, because I do think it's actually quite hard to separate from a driver perspective how much is optimization versus macro. It's all related when you start to say, what's the best ROI I can get on every budget dollar I spend? And our job as a partner to so many of these customers is to help them do that. So Satya's talked a bit about Azure. Let me talk a little bit about the per user, where the way it showed itself is we had very high renewal rates and very good suite performance at renewal, meaning what we tend to call internally recapture. While we had some more challenges on maybe a standalone sale of a new product, where the cycle's going to be a little longer, right? You're going to have to show that cost savings. But the suite sale, the value in that showed itself in terms of strong E5. You can see the ARPU growth, and you can see the consistency potentially in both renewal rate and in, frankly, the Microsoft 365 performance.
Perfect. Thank you very much.
Thanks,
I
Mark.
appreciate it.
Yeah, thanks, Mark. Joe, next question, please.
Our next question comes from the line of Kash Rangan with Goldman Sachs. Please proceed.
Thank you very much. Satya, I'm curious if you could talk about how long the cycle time for optimization lasts. Are we talking a couple of quarters, few quarters, or multiple years? Because I do take your comment about tech spending as a percentage of global GDP going higher. So if that were to happen, how do you frame the duration of this optimization that's happening in the industry? Thank you so much.
Yeah, I mean, I think that you have a workload, you optimize the workload, and you start a new workload. So the thing that I would say is when you're done with optimizing a workload is when you are done with the cycle. So I think if you sort of say, when did we enter this? We accelerated a bunch of workloads during the pandemic over a period of 2 years. So we are optimizing. I don't think we're going to take 2 years to optimize, but we're going to take this year to optimize. And then as we optimize, the new projects start. And the new project starts don't start instantly at their peak usage. They start and then they scale. And so those are the two cycles that'll happen where there will be a time lag.
Got it. So it's a temporary adjustment before we start to get the full effect of the next set of workloads. Good to get that.
That's correct.
Thank you.
That's correct.
Thank you.
Thanks, Cash. Joe, next question, please.
The next question comes from the line of Karl Keirstead with UBS. Please proceed.
Thank you. This one for Amy. Amy, given the obviously tough environment, it sounds like reaching that full fiscal year 20% constant currency commercial revs guide would be tough. Is that also true for the soft guidance for 10% plus total revenue growth for the year? And if I could just sneak in a clarification, Amy, just because it's an important metric. When you talk about a 4 to 5 point decel in Azure, that's off of the 38% reported for December, right? Not off the 35 exit rate. Thank you.
It's off, Carl, let me just, the first half of your question, give me a second on the second half of your question, which is the guide off the exit rate? It's off the exit rate on Azure of 4 to 5 points, just to make sure that is clear. In terms of thinking about total year revenue, you're right, I did not comment on full year revenue as we continue, I think, really just to watch the Windows PC market as it returns to pre-pandemic levels. Outside of that, as you can see, the trends are relatively consistent. So in some ways it's important because when you look at the operating income margin guidance that I talked about, the fact that we're guiding to really only 1 point of margin deceleration for the year on a constant currency basis, with probably over $2 billion of headwind from the OEM business from what we had anticipated heading into the year. The focus on margins, the focus on prioritization, the focus on putting our investments into where we know they have high return. I actually feel quite good about the place that puts us in as we exit the year in terms of, and the right energy, right? We're leaving the year in Q4 on leverage.
Got it. Super helpful. Thanks, Amy.
Thanks, Carl. Joe, next question, please.
Our next question comes from the line of Brad Zelnick with Deutsche Bank. Please proceed.
Great. Thanks very much. Amy, I wanted to ask about the expense actions that you announced last week. Obviously not a decision that you would take lightly. How are you thinking about headcount for the remainder of the year and the possibility for further expense actions if necessary? And what criteria do you consider in making these decisions? Thanks.
Brad, listen, thanks for that question. Obviously, as we think about the Q4 guidance around low single-digit operating expense growth, we start to, as you know, sort of lap certain real acceleration points that we had last year, and we lapped the acquisitions, both of Nuance and of Xandr. So by the time that we get to the end of Q4, you'll see very moderated headcount growth on a year-over-year basis, in addition to some of the prioritization decisions we've made. And you're right, we take decisions like the one we had to make to get our cost structure more in line with revenue just incredibly seriously, because we have lots of very talented people who were impacted by that. And so I do think that we feel confident in that exit rate. And as I said, it'll certainly imply that year-over-year growth as we lap some of the investment that we've made will be quite small.
Thanks for the color.
Thanks, Brad. Joe, next question, please.
Our next question comes from the line of Brad Reback with Stifel. Please proceed.
Great. Thanks very much. On Office 365 commercial, with you guys approaching 400 million seats and the E5 business really starting to accelerate here on that consolidated sort of expense ROI that you're putting forth, should we think about the growth there more evenly balanced between seats and ARPU going forward, or still to continue to favor seats? Thanks.
Yeah, that's a good question, especially because this quarter you started to see a little bit more of that ARPU influence. And as you might have gathered from your question, and I'll just reinforce it, as we see some of these moderating seat growth, whether that's some of the new SKU weakness that we had talked about, some of the standalone stuff, you're starting to also see E5 ARPU happen at the same time. So it does create some stability in that Office 365 commercial revenue number. So we're seeing, still good seat growth, still growth across all workloads. And, as you're pointing out, we're getting further into the E5 health, where we've seen, I want to say, 4 or 5 really good quarters of E5 adoption. The value there is just very high for customers in this environment, between analytics, security, and I think, we've given some, good security data points in terms of adoption and voice. This is a place where customers can save money by moving to this suite. And I do think you're starting to see some of that ARPU help.
And we're also
That's great.
investing in outside of Microsoft 365 in other per user workloads, Viva being a new suite, Power Platform on its own, and even standalone offers like even Teams Pro and what have you. So there's a significant amount of work we want to do besides the sort of the suites that we all sort of have at scale.
Great. Thank you very much.
Joe, we have time for one last question.
Our next question comes from the line of Tyler Radke with Citi. Please proceed.
Yes, thanks for taking the question. I wanted to ask just about how your visibility has changed in terms of some of the larger Azure customer ramps. Could you just comment on, to the extent those large customer ramps, or if any of those projects are getting put on pause? And then is there any way to just kind of quantify the AI potential contribution or maybe GPU powered contribution to Azure that you're expecting over the coming quarters? Thank you.
On the second piece, I think it's too early to sort of start somehow separating out AI from the rest of the workload. I mean, even the workloads themselves, AI is just going to be core part of a workload in Azure versus just AI alone. So in other words, if you have an application that's using a bunch of inference, let's say, it's also going to have a bunch of storage, and it's going to have a bunch of other compute beyond GPU inferencing, if you will. So I think over time, obviously, I think every app is going to be an AI app. That's, I think, the best way to think about this transformation. On your characterization of the large customers, whether there is any changes in their trajectory, I would say I would point back to, I think, some of the commentary around every large customer is looking to optimize the workloads that they have at scale today and plow some of that money back that they save into new project start. So that's sort of what the classic pattern of large customers is. Sometimes you have ISVs who are different, right? So if an ISV is optimizing, they optimize and say, what is the
Is it just me, or did they just stop talking, man? It's still supposed to be playing. Hello? The volume's up. We're live, We are experiencing technical difficulty.
Do you want me to move?
Okay, yeah, so he just went out. It wasn't me. It wasn't my sound, guys. This is their sound.
Hello.
That can't be a good sign, though.
Hello, do you want me to use the backup? Hello.
Dun, dun, dun.
Hello.
Ladies and gentlemen, please stand by.
Yep. I mean, it was the last question anyway. Let's see, now my eyes are starting to hurt again, man. I thought they were getting better.
I got it here.
All right, so I don't know if they know we can hear them, but yo, we can hear y'all.
Please resume on phone 2.
Okay, they're back. All right. Speak to us.
That wraps up the Q&A portion of today's earnings call. Thank you for joining us today, and we look forward to speaking with all of you soon.
Later, guys. All right, guys. So that is the earnings call for Microsoft today. Remember, if you haven't already, hit the subscribe button. We cover all the major earnings. We cover stocks, crypto, Forex, futures. We day trade, swing trade, and invest live every weekday morning at the opening bell. We will be back tomorrow for the opening stream tomorrow morning, bright and early. And then we're also going to stream Tesla earnings tomorrow evening. So y'all hit that subscribe button. If you hit the notification bell, you will get an alert anytime we go live or drop a new video. So yeah, that's the end of the call today. If you haven't already, check out our sponsors. Check out TopStep. TopStep is a funded account program for futures. You can see Microsoft moves a lot like the E-mini or the micro E-mini. So the E-mini is the S&P 500 in futures, but you can day trade it without restriction with no PDT rule in futures. You can day trade short it without restriction. Here is the E-mini. You can see here, and it looks a lot like Microsoft. And so if you want to capitalize on this action, there's no PDT rule in futures. Check out TopStep. It's a great way to test yourself to see if you're ready to put some money up in futures. They give you a demo. If you can hit the target on the demo while following their rules and pass their testing, then they legitimately fund you between $50,000 to $150,000 as a proprietary trader with a 90% profit split. Once you're funded, regulated in the U.S., they pay out millions, fund thousands of traders a year. The most legit futures funded program in the world. If you want to check it out, here is the link. You can also find the link in the description for both Chart Prime. Chart Prime has been surprisingly accurate today as well. I made about $200 using Chart Prime as well. But yeah, y'all check out the link. I love you all. Y'all be safe. Hit the subscribe button. We will be back bright and early. It looks like Microsoft gave all of its gains back that it made from honestly, its earnings weren't like super impressive. It was just kind of mixed results. They had some good, some bad. I think one of the deals with OpenAI, the Chat GPT group, had them up. And then, during the earnings call, they just kind of gave it all back. So we'll see what happens. Y'all be safe. Be careful. And we'll see you guys bright and early tomorrow morning. Love you all. Hit that sub button. Again, we'll be back bright and early. We'll see you guys then.